Murarka is with us now. He's CEO and Chief Investment Officer at Renaissance Investment Managers. Pankaj, good to have you with us here. Thank you very much for your time. I think the last we spoke was on the day of the budget. And what a move since, right? Seems like a distant, far away memory. But just happened, right? But the market, of course, has put so much distance between where we were then and where we are now. Pankaj, how are you? What are you bullish on? What are you sort of adding to your portfolio? What are you sort of actively looking at as investment opportunities?
Morning, Prashant. Yeah, you're absolutely right. Last month looks like we've lived through a period of a year because the kind of volatility and up move we've seen, what we typically see over a period of a year, we all experienced that in last month. Prashant, our overall bias continues to remain constructive. I've said this, I think, previously in our conversation. I still believe that we are somewhere near the mid-cycle of this bull market, which effectively I still mean that this business cycle or economic cycle has a long, long way to go. From an investing point of view, incrementally, we've gone overweight in IT as a sector over the last few months because we think probably the IT is a classical global cyclical. The worst of slowdown probably is in the price, and probably we think the business will pick up from second half onwards, and we see a strong IT spend cycle globally as well going into the next year. So, and valuations, it's one of those pockets in the markets where valuations are still very reasonable in context of the medium-term and longer-term growth outlook. So that's one which we have, incrementally added to over the last few months. Apart from that, we continue to remain positive on engineering capital goods as a sector, and that remains our biggest overweight. Having said that, valuations are extremely rich.
Okay, valuations are extremely rich. I think that seems to be the only problem that this market is facing, right? Which is sort of preventing it from getting well above that 80,000 mark on the sensex. Pankaj, thanks a lot for joining in. One space perhaps that valuations don't look as expensive is IT because of the kind of underperformance that IT has seen so far. But a lot of analysts, experts have told us that perhaps the worst is over for the IT sector. Would you concur, and is it a good time to be buying IT stocks now?
Morning, Sonia. Yeah, I think so, Sonia. We actually are, I'm personally very positive on IT as a sector. One, probably we see early signs of recovery in spends globally, in IT spends globally. And I think we should see first half of this year should be much better than the weak fourth quarter, which most of the IT companies had. More importantly, we think business will, or companies will report much better numbers, or business cycle will see an uptick starting from second half of this year. More importantly, I think this is my view from a slightly more medium-term perspective. The global IT spends driven by Gen AI probably will lead to one of the biggest IT spending cycle that the world has seen in the last 30, 40 years since the upcoming of internet. So probably my view is that the next cycle in IT spend will be much bigger than the previous, the last biggest cycle which we saw, which was internet cycle. So from a slightly more medium-term to longer-term perspective, I'm far more bullish on IT than from a more near-term perspective.
All right. Hi, Pankaj. Good morning. So on tech, you're fairly positive. And as you said, you'll have gone a little bit overweight out there. Let's talk about banks then. I'm looking at one of your funds, your Opportunities Portfolio Fund. And out there, looking at your top holdings, top of the list is SBI, which has been a class apart in 2024 so far. And in the last 1 year as well has been a big outperformer. But, you also have HDFC Bank in there. So I think you have 5% weightage for HDFC Bank and around 7% roughly for SBI. Do you continue to maintain this sort of a weightage? Will SBI be top of the pick, or do you believe now the case is stronger for HDFC Bank to outperform from here on?
Nigel, relatively between the two from a stock price performance, I think SBI will still outperform HDFC Bank over the next couple of years. SBI is a bank, obviously, all of us know, has gone through a deep rate cycle, but now they are probably in a situation where the operating numbers and growth of SBI are very much similar to HDFC Bank, and it trades at a significant valuation discount to HDFC Bank. It's a solid franchise, so I think there is a significant, apart from earnings growth, there is a significant valuation catch-up which is yet to happen in SBI, and which should certainly play out over the next couple of years. So in that sense, SBI remains our preferred bet from a returns perspective over the next couple of years. Having said that, I think HDFC Bank probably is towards the fag end of its underperformance. Having said that, we continue to remain grossly underweight HDFC Bank versus its weightage in the indices because we find one, better opportunities within the banking sector, and probably from a bank sector as a whole, we continue to remain underweight because we find better growth opportunities outside of banking sector than within the sector. And it's apparent now, I believe that banks is not the lead growth sector in India in this cycle, and probably it will continue to be so. So probably the other sectors which are growing at much faster than banking as a sector, and we being growth and high growth investors, we're always chasing high growth companies.
Yeah. Pankaj, what about sectors trying to find newer opportunities where there will be government support? So this entire Make in India, etc., started with PLIs, right? First time PLI schemes were announced. The entire EMS space has benefited so much. Defense, Make in India. I mean, this is all, in a way, it's paid to look at where there is that tailwind of continued government support. Are there any newer areas where we will see that support? I mean, I was just wondering, I mean, we hear constantly, we hear about water as the issue, right? What can we solve that through technology? There are a few companies which are listed. One has heard that off and on. I'm not sure. What are you looking at, if that is really a way to sort of work through to ideas?
Well, Prashant, on the whole investment cycle, while there are a lot of opportunities across what you say in terms of PLIs and within PLIs across, let's say, auto ancillary, electronic manufacturers, EMS space, and so on and so forth. And we have exposure to some of these companies in the EMS spaces, right from Dixon to some of the other smaller cap companies as well. But I must confess that currently where we stand from a market valuation perspective, all of these stocks are pricing in the next 8 quarters of growth. So for an investor looking to invest incrementally, the money is to be made basis fundamentals only probably 8 quarters out. So I think stocks in the sector, I would say, are priced to perfection or richly priced. So our whole approach is to continue to hold what we are holding in the sector, but not incrementally add, because valuations are rich. From a more medium-term perspective, when we look at markets from a next 1 to 2 year prism, I think there will be pivot in this budget towards consumer welfareism, especially given the outcome of the elections. So I'll not be surprised if government, and the good thing is that there's tax buoyancy, government has revenue at its disposal. So I'll not be surprised if some $10-15 billion is allocated to some sort of a consumer measures or welfare schemes. Also, the fact that there's a deep slowdown in rural consumption, and in a sort, there's a cost of living crisis in the rural India. So in that context, some of the consumer discretionary names, I think, could witness a cyclical recovery over the next 6 to 8 quarters. And their valuations have moderated compared to where they were 8 quarters back. So from a slightly more near-term perspective or a medium-term perspective, I think consumer discretionary looks more attractive from a risk-reward perspective.
Okay, by the way, there's an update from InfoEdge about the JobsSpeak index and the hiring activity, which has dropped quite a bit. It continues to be quite muted. And I think in sectors like IT, hiring has dropped about 5% or so. That's what I read a while back. And they're not looking good, right? I mean, it's a proper barometer of the jobs, and the hiring cycle is a proper barometer of which way things are going. Pankaj, before we let you go, just a word on this. I mean, hiring activity has slowed down. It's muted, especially in places like IT. Is that a reason to be concerned? Because eventually that is going to affect demand, affect consumption, etc., right?
Well, you're right, Sonia, but I don't think so one should be too concerned about it, because these companies are coming from a cycle where post-COVID, they did end up overhiring people, and then the growth suddenly moderated. So, so I think hiring will pick up as we go in the second half of the year. So I think I'm not too concerned about hiring trends, though you're absolutely right. They've been somewhat sluggish in the last 6 months or so, but I think it'll pick up in the second half of the year.
Okay, well, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts and on the market as well as on individual sectors. For the market.